Welcome back, all my fellow traders. In this video, I'm going to prepare you for the week ahead in the stock market, specifically looking at the S&P E-mini. It's the contract that I like to trade, also known as the ES. But while we're looking at that, we of course will be looking at the potential divergence in the market against the NASDAQ, the sell-off that we had on Friday, the strength or possibly now weakness in tech as it starts to roll over, the news events coming this week, and any divergence we can see in the dollar and the VIX. So as always, I'm going to start with a top-down approach, starting on the E-mini S&P or the ES on the weeklies. Let's get into it right now. Starting off with the weekly chart then, and you can see there is absolutely no change here. Very easy for people to get bearish as we keep pumping higher, but from a weekly standpoint, we are clearly still making a series of higher highs and higher lows. So the most notable pullback was all the way back here in early January, and since then we have continued to print higher, including this week. Now on the weekly candle this week, we did clearly make a new higher high, and yes, we left a wick top, pulling back inside the previous weekly's range, and importantly leaving this double bottom or relative equal lows. So we swept the low down here from the previous week before pumping up, making new highs, and then closing back inside. Very easy to feel bearish after the price action on Friday, but just from a weekly standpoint, it's really important to just take your bias off the table, look at the chart in front of you, and from a weekly standpoint, we are quite clearly bullish. So now with my drawings on, you can see we are quite clearly bullish, all right? No real supply has been made. You could argue there's some supply left up here on the daily and 4 hour, which I'll get into later in this video. But really, we have not even retested this breakout level, which was the old demand block that we put in. So until, from a weekly point of view, we test this level and break below, retest and stay heavy, the weekly is going to remain bullish, all right? I've got to think most of the buyers from big institutions are sat in here in this block waiting for that retest of the all-time highs. And you will notice this Fibonacci lines up with that. So the market loves to create flags into this 38 fib. So I would not be surprised to see something like this and some level of consolidation for a number of days or weeks before we retest the highs, maybe the measured move and maybe above. From a weekly standpoint, I would not be getting bearish until we broke below this, showed a willingness to stay heavy, and then continued this trend down. That would have to take a number of weeks and months to do. This is not something I'm looking at this week. I am just preparing you for all possible scenarios that this market might play out. From this point though, we are still bullish and we still haven't met our target. If I do a fib from here to here, you will see the measured move is still hanging above. So I've got to think the market wants to do this full move from this old pullback on the handle of this giant cup on a weekly. It's trying to trend up to here, and it's not really that far now, okay? So it's very possible that if the market wants to get bullish over this week or the next one, it's going to attempt to do that measured move, and then we can see what's what. Once we start hitting these fib levels, we can think about what the market might want to do next. Moving down into the daily chart, and you can see the same thesis applies, all right? Very clearly, higher highs and higher lows. We had this nice consolidation before the breakout. We pulled back inside, we broke back out, and we're still making higher highs and higher lows. Now, earlier this week on the hot CPI print, we had this big bearish move down, which instantly got soaked up off this key level on the daily, okay? From this old gap, you can see there's a gap in here, which I pointed out the last 2 weeks. This gap, I was looking to see if buyers would step up because we had a demand block underneath with a gap with a move to the upside. So you had to think dip buyers will sat there waiting, and that's what we got. We got the print back up after CPI on Wednesday all the way back to the highs before we pulled back on Friday. Now, Friday felt very bearish, didn't it? Especially into the close, because it looked like it wanted to make that move higher. But we had OPEX, we had some risk off, we had some profit taking. Some of tech was very heavy, which I'm going to get into later. So putting my drawings back on to help you now. You have to think that the daily is still bullish, okay? If I draw it out for you, there is absolutely no denying. We had some consolidation here with like a nice ABC pattern before we broke up. We came back inside. That was the retest of that ABC breakout. Pulled back in, retested, back up, double bottom low, and now we've pushed back. Now, yes, we have closed inside, and shorts are looking for this double top. But as I teach to all my students, no downtrend is confirmed until you have a change of character and a break of structure. What do I mean by that? If we just think about the move of the market, okay, we have done something like this currently, okay, and they're looking for a double top here. Now, a change of character will happen if we get a move below, which would be right here, right? That would be your change of character. But, and there is a but, this could still be a trap low and we can move back to new highs, which is why you need to have a break of structure after a change of character to confirm a trend. So you would need this to come back inside and then get a break of structure underneath this new swing low. That would be the confirmation that the trend has shifted, and we simply do not have that yet. If I move down, yes, there is a double top, but there is absolutely no change of character until we get below this blue box. And you have to understand, below this blue box we have a demand level, and just below that we have this old breakout point from the all-time highs. So while it is very possible that the market might want to do this move down, it can do a move up. So you need to be cautious and wait for a pattern to play out. Now, the best pattern here is going to be if it stays heavy and it retests this old level in this demand block and proves to you that it wants to move lower. Until that point, you should not be assuming a short on the market. I know Friday felt heavy, but if you just step back and look at this print, it is still consolidating towards all-time highs. There is absolutely nothing in the weekly or the daily that is suggesting it's a short. We will need to take out these equal lows here and stay heavy on a retest for a change of character and a break of structure to start rolling over. The next thing I want to look at with you on a daily point of view is, of course, the Bollinger Bands, because they came in absolutely clutch last week. We talked about these Bollinger Bands on the daily print over the last 2 or 3 weeks in these Sunday scans, and they came in key. Now, the upper Bollinger Band is still printing up and the lower Bollinger Band is still printing up. Until they start to roll over, there is no indication that the market really wants to move more deep. And what you will notice here, as when we got this doji into the upper Bollinger Band and we had that big rejection on CPI, where did we come down to? Here's the old gap, and we tapped the 20-day. Why is that key? The 20-day is a mean reversion of the Bollinger Bands. It was something we were looking at for the last 2 weeks. Now, if buyers stepped up there, the likely thing to do would be to go straight back to the 5-day, which is this blue line, and then try and retest the top Bollinger Band. So right now, we are clearly in consolidation between the top Bollinger Band and the 5-day moving average, which is technically extremely bullish. The most obvious short on this market will come when the 5-day and the 20-day cross. And you do not want to be early, because you'll notice here we get a 5-day trend down to the 20-day, hold this inverse head and shoulder look and move to the upside. But when you do get these crosses, they can be very, very nice, and it will come down and test the lower Bollinger Band, and you will see it over and over again. 5-day crosses 20, down to the bottom Bollinger Band, come back into a mean reversion, down to the bottom Bollinger Band. And you get the same here. We track up to the top Bollinger Band, the 5-day starts to curl over, it fails and crosses underneath the 20-day, and we trend down with the 5-day to the lower Bollinger Band. So that's what I've got my eyes on when I'm thinking about a short. I do not want to be participating, looking for tops up here near the top Bollinger Band, hoping that it is going to roll over. Hope is not a strategy, and it will get you in trouble. Do not be guessing tops. Be very patient in this market and simply follow the trend until it starts to shift, and then you can start thinking about the reversal. Until that point, you do not need to be guessing tops. There are a couple of patterns that I am looking for to potentially play out over the forthcoming week, and the best time frame to see these on are the 4-hour and the 1-hour chart. This right here is a 4-hour chart. Now you will see right now we got what we thought the buyers might try and do. They are looking for this giant cup and handle. So if you can't see it, here is the cup, here is the handle, and we were looking for this extension, and we almost got it on Friday, but they stuffed it into this old supply level right here. So we came in, retested, flushed, pushed back in, flushed again. Now it feels very bearish, but you have to bear in mind this can still just be a handle for that move up. So when do I feel more bearish on this? Well, the best pattern for me will kind of be like a double top head and shoulders, which would sort of look something like this. If you think about this as a shoulder, and we pull back inside and we do this move right here with a giant M pattern, and we do something like this, all right? That will be extremely bearish. Now, a variation of this would be a deeper pullback here, all right, using this as the potential shoulder or neckline. And this retest into this old demand pocket, becoming supply, and then you could look for a continuation short underneath here and here. Now the trouble with that is you have to be aware of what's underneath. The blue box and the grey box are the old all-time highs, which were also old ranges. So if you are looking for a rotation down into this, you can see I've left it here the last 3, 4, 5 weeks. This is your key weekly over-under level, and you have to be cautious of that because it can quite easily trend with this anchored VWAP by this point being here, and I am going to expect buyers to try and step up there because it would be the best value buy that we've had for months. So you have to be cautious when you're looking for that rotation down. Don't be thinking we're going to make new fresh lows going right down to that October level. There's no reason right now for the market to try and sell off. Everything coming in is pretty bullish. Now, I know we had a hot CPI and a hot PPI print, but if you understand seasonal activity, you will have known that it was highly likely for those to be slightly hotter, and the chances of having hot CPI and PPI for the remainder of the year remain much, much more slim than the January print. So you have to be thinking of that. From a bullish point of view, what are we looking for? Well, we talked about it earlier. This cup and handle on an hourly or a 4-hour would be absolutely magnificent. But the other option is if it does want to come back to this level and put in a triple bottom and then rotate up, that's also still an option. You have to be cautious. Quite clearly, this is a big demand level. Moving into the hourly chart then, and this is when we can get into the nitty gritty and think about what actually happened on Friday. Friday was quite a tricky day, but it had loads of range, and if you were patient and you took your profits, you would have done very well. So what did we actually have? We had a hot PPI print right here, which brought this big flush down into an old close and an area of demand. Now, if you just thought about that from a Fibonacci level, you would have been very, very ready for buyers to step in because we had a pullback into the 38. You will see holding a potential flag. And I talk about this on my course. Flags love to build into this 038 fib. I don't know why, it's just where they like to build. The deeper pullback, of course, would be into discount, but flags love to build around that 30 to 38, and that's what we got. It pulled back into a daily level, it held this demand, and then it rotated all the way back. Now, this right here was manipulation. It did a deep pullback in, which was quite aggressive over lunch, before pumping back up, using those shorts, using their stops to attack this area of supply. All the buyers sold into that, and then we had a big sell-off into the end of day after that lunch period. But really, what did we do? All we've done is come back into this same level of demand. Now, I will agree with you, from a structural point of view, on an hourly chart, this is bearish, okay? It has shifted bearish because we were making a series of higher highs and higher lows, just like this, and then we had a shift here, a pullback inside, and a failure. So now for a continuation trade on an hourly chart, you would be looking for a new low here, a pullback inside, and then making a lower high for a continuation back down to demand. Now, this will be a trade I'll be looking for on Tuesday. Remember, Monday isn't open. It's President's Day. It's going to be very short trading hours. I'm not going to trade Monday. There will be very little liquidity. So, if we get this play out, I'm going to be looking for this back into demand, but I'm not going to assume this is going to happen, all right? It has to break down first. If it fails to break down and it's showing a willingness maybe to run stops and grind back up, then I'm going to think about this whole area here as a giant handle inside another handle. So we are going to be like this. This is a giant handle with consolidation, and then I'm going to be looking for a new cup and handle in here. You can see it there for that expansion. All right, I don't want to be buying the breakout up here because they might do a failed breakout and instantly stuff it. Personally, I'm thinking if there is a giant cup and handle with another cup and handle inside the old handle, there's going to be an awful lot of stops up there. So if I can get involved buying this cup into this part of the handle for that breakout, there is a really good chance we get a very explosive stop run above this old all-time high of 50.6650. And it's from there that I'll be looking to take profit. I am not going to be looking to add above it. The only time I'll add above it is if we then pull back in, turn old supply into demand, and continue the trend, right? So those are the two options. On the hourly, I'm already thinking about. On a lower time frame, I, of course, will be looking to use my flow zones to give me confluence, using anchored VWAPs and using Fibonacci's for my key levels. One chart I wanted to look at was the NQ, because the NQ finally is showing relative weakness. We talked about this at the very start of the year. We will get an inclination of the market potentially topping out when the NQ starts to roll over, and that's all to do with weighting. The NQ is far more weighted into tech. And tech and the AI bubble is exactly what has been driving this market since that October low. If you have a look at NVIDIA, at AMD, at the Mag 7, at SMCI, you will see a huge explosion, and it's being driven by AI in the tech world. So if we get that profit taking, which we started to see last week, then you can imagine we'll start to roll over in the NASDAQ and the ES will quickly follow. Now, this chart right here is the NASDAQ on a 1 hour, and you will notice a huge difference with this in the ES because we never really got up to retest. We had this area right here of supply, and you will see this looks much, much, much better in terms of a lower high and failure. If I was a short seller, this is looking much better than ES because we never got that move up for the cup. All right, here is a giant move or an inverse head and shoulders or a quasi, and we failed to apply. And instantly here is the key. That is a lower low on the hourly. This is a lower high. And if we can continue this, I'm going to expect them to run all these stops down here and come back inside this range of demand. Now, if we continue to get heavier under here, you're going to see quite a dramatic sell-off because it has room all the way down to these levels, all right? So you have to be thinking about this is your potential range. If you thought about liquidity at a higher time frame, that would be left shoulder, this would be head, and a right shoulder will appear here. So you would get a move something like this over a number of sessions to come back down inside, and this would be your neckline. Similar to ES, yes, very similar to ES, but much, much weaker. Now, you need to think about the news catalyst for this to happen this week. We might have a sell the news event, and that's going to happen after the close on Wednesday because NVIDIA finally has its earnings. And here is the NVIDIA chart. Now, this is just an astronomical rise, okay? Look at this over the last year. A huge move, over $600 move per share, and it is simply pumped since the start of the year. Massive, massive move up. It is consolidating at the highs for sure. This is still bullish. It is consolidation above this gap. But if coming into right here, into this earnings event, if they either print bad earnings and miss, or even if they print good earnings and it is a sell the news event because all of the good earnings is priced in from this move, you are going to see NVIDIA do a drastic move, and it can come a long way down before it finds true areas of support. The good structure is all the way down here. Does it have to do that whole move in one go? Of course not. Okay, we can think about potential fib retracements, where it would come to on a 50% or a potential flag, but we're still talking about a 100-point move. And if we got a move like that, you have to think the rest of the Mag 7 might start to follow, because NVIDIA has been the driving force in this move higher. The confluence we had with this on Friday was a blow off top in SMCI. Just like NVIDIA, SMCI has been on just a huge move higher this year, printing highs of over $1,000 for that blow off top on Friday before doing a 20% pullback. And you have to understand there is a huge amount of room for this to continue to pull back. So if market makers, if hedge funds all took profits into here, use that blow off top for the liquidity to get short, they're going to be looking for a lower high model, and they're going to look for this to come all the way back down for a form of mean reversion. There's so much room for this to do a mean reversion. Using the same thesis of Bollinger Bands and mean reversion on a daily, here's your blow off top move, here's your 20-day. Lots and lots of room left. So if NVIDIA starts to get heavy, if SMCI is the leader in profit taking, if we start to flip and roll over on the Mag 7, you're going to see NASDAQ get heavy and you're going to see ES roll over. These are all if, but, and when scenarios. These don't have to happen, but you need to be aware of them potentially happening. So Wednesday after close is going to be a key event to see how we react to the NVIDIA earnings. Are they good? Do we print higher? Do bulls continue to push this market higher? Is there a sell the news event? Are the prints good, but we just sell all the liquidity into it and use to dump on retail to go lower? Or in fact, do they miss? Do they finally miss? I very much doubt it, but you just never know in this market. Building confidence to some of our trading thesis then, we're going to have a look at the dollar. This is the Dixie, and finally on the Dixie, we have built that head and shoulders. Quite clearly an inverse head and shoulder, and we got the breakout of the neckline. But crucially so far, all we've done is reprice this imbalance here on a daily. This could still signal a failed breakout on the dollar. Not yet though. Not yet, because now we have a chance to turn the old supply into support. So this red line here, which was so crucial, we can see how many times we've used it as an over-under. This was the neckline, and we can use this blue box now that I've drawn in here for a breakout retest. So there's the breakout. The retest of here on a daily is going to be pivotal, because if the dollar holds this level and makes a new high and continues to print higher, looking for this next level of supply, the market is quite simply going to roll over. If the dollar keeps pushing higher, the market is going to go risk off and roll over. So if we get this scenario here, timing with an NVIDIA sell-off, timing with tech and the Mag 7 starting to sell off, you need to start thinking about being risk off. And then if there is a shift on the market, you can start looking for that short. However, if this is a failed breakout on the dollar, which is what's showing so far, there's a stuff level in here. If we do a move like this, okay, then we're going to use this liquidity right here for a head and shoulder to come back inside. And something like this, breaking back down under this key level, I might as well call it 104. If we start breaking underneath that and rolling over and staying heavy on the dollar, the market's quite simply either going to continue to print higher or it's going to consolidate at the highs and build liquidity. So you've got to keep one eye on the DXY for this week and the remainder of the weeks while we figure out what the market wants to do. The last thing I want to draw your attention to, as always, is the volatility index, or the VIX. Now you can see this week, yet again, we are inside this channel. We had this huge spike on the CPI, and this is when the market really started to dump. So you can see this potential bear flag here. We broke out of it. We repriced a lot of the action higher, and we can do a fib in here from here to here, and you will see we got into a premium before coming back inside, and we are still just balancing in that range. So there's no real indication of what the market wants to do yet. We are continuing, though, I will point out, to print higher highs and higher lows. And if we continue to do that, there's going to be down pressure on the market. Now, the market, I will say, has this area of consolidation right in here, and all the time the market is trending down into here and holding it. It can continue to print higher, but really we're looking at above 1470, and the key trigger for me is above 15. If we can get above 15 and base, which we have not done yet, we've had a push and a fail. If we get above and base, that's going to be a signal that the market wants to go risk off. So just like the dollar, just like looking at the NASDAQ, you have to have an eye on these markets to see what we're trying to do. Now, this week, I'm going to repeat, is a very, very light week of news. You can see Monday, we have a national bank holiday. Tuesday, US leading economic indicators, very light news. No one's really paying too much attention to these. We do have some Fed talkers and some Fed minutes on Wednesday, so you might see the market really slow down into these minutes. So people want to see what they actually talked about in the last FOMC meeting. And Thursday is really when we're going to get that injection of liquidity. Jobless claims and PMI and a load of speakers again. And then Friday, nothing. So a light week of news other than Thursday. So you've got to think this week might be much, much lower volume. So be very, very careful getting into your positions. Understand that without the volume, while the market's deciding what it wants to do, it can get pretty thin pretty quick. That being said, that's all from me this week. I hope you have a fantastic week. Don't forget, if you want to learn to trade, I'll put my beginner's course for free right now in the top. You can watch that at any time. If you enjoy it, you can do the Flow Zone Trader course right now. It's over 20 hours. The sale ends today at midnight. You can get it for $299 until the sale ends at midnight. I'll put the link down below. And of course, Apex has its sale right on. I'll drop that link underneath the description with the code. Have a great week. Trade safe, trade light, use hard stops. I'll see you next time.